Very good afternoon to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's very important webinar that is on analytical procedures in audit. As we all know that WSB of ICI has already conducted more than 105 CP programs in this council year, and we have catered all these standards of auditing with the help of the webinars as well as the physical programs at various branches as well as the on Zoom panel. We have also covered various topics like the financial line items of the asset side as well as the liability side of the balance sheet, and covered various line items. What are the various audit consideration while auditing the asset side as well as the liability side of the balance sheet. And today we are again going to cater a very important standard, that is SA 520. That is the analytical procedures in audit. And in order to cater this, we are having with us our very eminent, very learned speaker, C. Amit Kumar Jain ji. So on behalf of WSP of ICI, Amit sir, I welcome you in this Zoom platform and a very important webinar organized by WSP of ICI. Welcome,
Thank you.
Amit.
Thank you so much, sir. Thank you so much. Should I?
Honorable Chairman and Vice Chairman, sir, both are stuck up in very important meetings. That is why we take this liberty to start this today's webinar. And before we start, it is my proud privilege with all of you to share the brief profile of Amit Kumar Jain. Amit ji has
Thank you.
over 15 years of big board experience, including 3 years of articleship period, and is currently working as a director in Ernst & Young Financial Accounting Advisory Services. Prior to joining the firm, he was a part of KPMG and its assurance team. He is currently based out in the Gurgaon office, and he is a fellow chartered accountant and bachelor's in commerce. As far as professional experience is concerned, Amit has key skills like gap conversion in AS, IFRS, and US gap conversion, financial reporting consolidations, review recognition, finance transformation and past closing, financial statement navigation, designing of policy framework, SOPs and narratives, governance, risk and internal controls, internal financial control, enterprise risk management, IQ advisory, PMO assistance, setting up of the corporate governance, assistance in carve out of the financial statement preparation, trainings like IFRS, US GAAP, Indian and Indian GAAP. Amit has delivered many lectures in the form of seminars, webinars, and virtual CP meetings. And during the COVID period, he has also given so many webinars and virtual CP meetings. He is involved in assisting ICI in developing educational material on consolidation standards like India's 110, India's 27, 28, 111, and 112. Amit has significant experience in assisting clients in across diversified sectors, including consumer market, automotive, manufacturing, and retail sector. He has led many Indias and IFRS gap conversion engagements and worked as subject matter expert in resolving complex accounting transactions with respect to the financial instruments, consolidation, impairment, revenue recognition, and business combination under Indian GAAP, Indias, and IFRS. He has extensive experience of project management and is currently leading some of the large accounting change and conversion engagement as a lead project manager. He has led various advisory projects with respect to restatement of financial statements, carve-out financial statements, and assisted client in development of the financial accounting manual. He has also led India's conversion project of one of the largest telecom company in India, including its 140 subsidiaries located across the geographical boundary. He is also leading India's conversion projects for one of the power sector company. He has also led IFRS 16 implementation project for one of the largest telecom company in India. So list is still very vast. So without wasting much more time, I again welcome you, Amit, on this very important webinar organized by WSP of ICI. So on behalf of WSP, I extend my warm welcome to you once again, and I request you to please start your deliberation and enlighten all of us on various instances of standard on auditing 5. Over to you, Amit.
Thank you, Anil sir. First of all, I would like to say big thank you to Chairman sir and Vice Chairman sir and Anilji to you as well for providing me this opportunity to present my views in respect of analytical procedures under the standards of auditing. Right. So Anilji, I will start. I will first share my screen. I hope this will be
Yes.
visible in a moment. Just give me a moment. I hope Anil sir, this is visible to you.
Yes, sir. Fine, sir. Fine.
Okay. So good afternoon, everyone. Today I'm going to discuss and provide some sort of insights in respect of the analytical procedures under audit, right? This is a standard of auditing 520, which has been issued by ICI in the past. This is effective from 1st April 2010, right? Way back. In respect of the analytical procedure, guys, from the, so I have experience in terms of auditor. I have the experience in terms of the consultant. So today I'm presenting my views from the perspective of the auditor, right? So since I'm having a very good experience from the audit and the accounting aspect, so a blend of thing I will try to incorporate in my PPT, and blend of thing I will try to impart my skills on through this particular topic, right? So analytical procedure, guy, first of all, we what we need to understand in this analytical procedure in the next 2 hour session, right? So today I am going to talk about, first of all, what is the overview of analytical procedure, what is analytical procedure, that is what we are going to discuss, right? Then we will discuss what are the other auditing procedure which the auditor should apply while doing the audit of any company, while doing the audit of the financial statement of any company, whether it's Indian GAAP, whether it's NDS, whether it's NBFCs, whether it's any other gap as well, right? In this particular aspect, I will briefly touch upon control testing, I will briefly touch upon substantive testing, and within the substantive testing I will discuss what is analytical, what are the different types of analytical procedure we are having, right? Then we will consider what are the factors which we should take into account while doing the auditing, through the analytical procedures. Then I will talk about what are the different techniques which we have in the auditing standard and which we should apply on the ground while doing the audit of the different financial statement captions in the balance sheet, different financial statement captions in the P&L, right? What are those techniques? Trend analysis, ratio analysis, reasonable analysis, variance analysis, right? So all these aspects we are going to talk about. Then what I have done separately, I have taken the some critical areas, some critical financial statement caption from the balance sheet, from the P&L, and I have provided some insights in this PPT that what kind of analytical procedure a person or the auditor should apply while doing the audit of the financial statement, right? So those areas are PPE. So when we will read PPE, we will understand what are the analytical procedure we should apply while doing the audit of PPE, right? Inventory, which is very critical area, because we have seen in the past that there are lots of ups and downs, there are many manipulation which has happened in the inventory area, right? So we will discuss what can be the possible analytical procedures in the area of inventory. Investment is the another area, receivables and payable, trade receivable, trade payable. Then we will also understand while doing the audit of these particular areas, what are the critical aspect which the auditor should take into consideration while doing the audit of these particular specific areas. Then I will talk about certain critical areas of the P&L, revenue, cost of goods sold, payroll, and expenses. That means in this particular aspect, we will understand what are the different analytical procedure which the auditor should take into consideration while doing the audit of these particular financial statement captions in the P&L, right? And in the last, I have incorporated certain FAQs, right? It suggests what we will read in these six subtopics that suggest that what are the things which we have studied, which we are going to study in next 2 hour, that I have captured in the form of FAQ. Right, guys? So this 7 topics I'm going to capture in next 2 hours in respect of what is analytical procedure, how it needs to be applied, what are the different technical skills, what are the different techniques of analytical procedure. Right, I hope we all are aligned in respect of the agenda of next 2 hours. Right, guys? So I will first start what is analytical procedure, right? So first of all, this is SA 520. This is SA 520, right? Standard of auditing issued by ISA in the past, right? So let's understand the basic meaning. First of all, what is analytical? If you look at what is the dictionary meaning of word analytical, it means is analyze, right? What does it mean? Analyze or analysis. Now the question arises, what is analysis? Which analysis we are talking about? What type of analysis we are talking about here, particular aspect? So that we are talking about analysis of the financial information, right? Analysis of the financial information. right? What is financial information? Financial information is that information which is given in the financial statement by the company. It is the management responsibility to prepare the financial statement. It is the auditor responsibility to do the audit of the financial statement, right? So what all information is given in the financial statement that needs to be audited, that is called financial information, on which the audit opinion needs to be given by the auditor. If I summarize what is financial information, let's devote 1 minute. What is financial information? In detail, you guys must have seen that the MC has issued Schedule 3, and in fact, the revised Schedule 3 in the past, which was applicable in the year 31st March 22, right? The revised Schedule 3 under Indian GAAP, under NDS, and under NDS for the NBFCs that has already been issued, right? So in the financial statement, what all information needs to be given, what is supposed to be given by the companies? First is balance sheet. So any information given in the balance sheet, that is the financial information. P&L, profit and loss statement. Any information given in the P&L is the financial information. Other comprehensive income, which is under NDS. So any information given under OCI, other comprehensive income, is a financial information. Cash flow is also a financial information. Statement of changes in equity, which is nothing but a share capital and reserve and surplus, that is also a financial information. Then we give background of the company. Then we give significant accounting policy of the company. Significant accounting policy talks about the different attributes which the company is having, different financial statement captions which the company is having, and what is the policy which the company has adopted in terms of doing the accounting. That is the financial information. Then the schedules of balance sheet, schedules of P&L, that needs to be given in detail in the financial statement, plus certain other disclosure as required by Companies Act, as required by the other respective standards, right? So this all information will categorize as financial information. So here we are talking about analytical procedures, right? Analytical procedures means, analytical dictionary meaning is analysis. Analysis of what? Analysis of the financial information from the auditor perspective. But how do we analyze? One is auditing. Within the auditing, there is a concept of analytical procedure. How do we analyze? How do we correlate two things? Right? So standard is saying, SA 520 is saying, analysis, perform the analysis. Auditor is supposed to perform the analysis of the financial information by reasonable, by reasonable, reasonable relationship, by developing reasonable relationship between, what? Between financial information, between financial information and non-financial information, right? So what is the definition which has been provided by the standard? Standard is saying analytical procedure means, first of all, we need to do the analysis. What is analysis? Analysis of what? Analysis of the financial information. What is financial information? My balance sheet, my P&L, my cash flow, my statement of changes in equity, my OCI, my notes to accounts, my other disclosures. That is called financial information. By developing reasonable relationship between financial information and non-financial information. That is what the definition of analytical procedure provided by the standard. Right now, the question arises, what is financial information? We have discussed any information which is disclosed in the balance sheet, P&L, OCI, cash flow, notes, and disclosure. Those information are financial information. What is non-financial information? Non-financial information which is not disclosed in the financial statement, that is a non-financial information. For example, number of employees, right? We don't disclose the number of employees or workers in the organization, right? Production capacity, we don't disclose production capacity. There is no requirement to disclose the production capacity, right? Scrap percentage, production percentage, right? In hotel industry, I can say occupancy, right? Volumes, sales target, sales volumes, purchase volume, production, inventory volumes. Those things are not disclosed in the financial information. So what the standard is trying to say, we need to develop a relationship between financial information and non-financial information, and we need to understand in a logical manner. We need to analyze in a logical manner, and that relationship we need to develop in a reasonable manner. It should not be the case that share we need to link the share capital with the other expense. It should not be the case we should link the ppe with the sales, because there is no relation between these two items. But if we are linking depreciation with the PPE, then it is a reasonable relationship. If I am linking number of workers with the payroll cost, then it's a reasonable relationship. If I'm linking the production capacity with the volumes, with the sales volume, with the inventory, with the purchase, then it is a reasonable relationship. If I'm linking the scrap income with the scrap percentage, then it is a reasonable relationship. If I'm linking the production percentage with the purchase of material or with the inventory, it is a reasonable relationship. If I'm linking in a hotel industry occupancy ratio with the revenue earned, then it's a reasonable relationship. If I'm linking the volumes of sale with the production, with the inventory, with the purchase, it is a reasonable relationship. So in a nutshell, my dear friend, what is analytical procedure? Just to analyze the financial information by building a relationship with the financial information, with the non-financial information, that is called analytical procedure. And it may also possible that we need to link the financial information with the other financial information. That is also analytical procedure, right? It is always not it is always not a case that we need to link the financial and the non-financial. Financial versus financial relationship is also an analytical procedure, but non-financial with the non-financial can never be a analytical procedure, because ultimately we are doing the audit of a company, we are doing the audit of the financial statement, we are doing the audit of the one financial statement caption of a company, right? So we have the financial information available for which we are doing the analytical procedure. So anyways, we need to link the financial information maybe with non-financial data or maybe with financial data. That is called analytical procedures, right? I just give you an example. I have tried to explain you in a very summarized form. I just give you an example, right? For example, let's talk about sales. I need to do the audit of the sales. And first of all, why it is actually required when we are doing the audit of the sale, right? Why analytical procedure is required? See, analytical procedure is required to obtain the comfort on the entire number. Let's say if I say that one company A is having a sale of rupees, let's say 1000 crores. Is it possible, just think logically, is it possible to do the checking of each transaction which the company has entered into entire year? It is not possible to check the each and every invoices. It is not possible to check each and every GRN. It is not possible to check each and every service order. It is not possible to check each and every document for every transaction. It is not possible, right? So we need to apply certain additional procedures, right, for which we will get a comfort on 1000 crores, right? That is what the analytical procedures. For example, what we should do, if let's say this is a sale, this includes different type of sale. Let's say category A, category B, category C. On this category, company is paying 5% GST. On this category, company is paying 15% 12% GST, and this category company is paying, let's say, 28% GST, right? And the company must be paying GST as well to department. Company must be paying GST to the department. So can I analyze the can I do some sort of analytics? If I multiply the respective sales with the respective GST rates, I will get the GST amount and I will check it with the GST return. That becomes the analytical procedure. In this particular type of transaction, I have analyzed the financial information with this non-financial information, because this has not been disclosed in the financial data or the financial statements, right? So how it actually works, if I say that the sales, right, category A, category B, category C, let's say this is 500 crores, this is 200 crores, and this is 100 crores, this becomes 1000 crores, right? Then I have GST rates. So let's say this is multiply by 5%, multiply by the 12% and multiply by 28%. So I will get GST amount, right? I will get the GST amount. And what is the GST which as per the GST return which the company has paid, right? There should be ideally no difference between these two numbers, right? But if there is any difference, if there is any difference, then we need to inquire from the management why there is a difference. Just by performing this procedure, I will get some sort of comfort that first of all, company is actually paying GST on the entire sales, right? Company is actually paying GST on the entire sales. Give me the so that's the additional comfort which I've got apart from the sample testing, apart from the control testing, apart from the substantive testing, which is test of details. So this is give me a couple of benefit. First, I'm getting the comfort that yes, the sale is complete. Company is actually paying the GST on the entire number, right? Second, I have checked from the GST return that what is the sale of the company. I can do the reverse calculation as well. For example, I am saying 20 crore rupees is the GST amount divided by 5% or 8% or 15% or 28% or 12%, right? Whatever the GST rate is. And I will compute I will reach back to the sale value. So this kind of scenario becomes an analytical procedure. That means I'm just analyzing it, applying mind, applying some sort of creativity, developing the relationship between a financial information and a non-financial information. That is called analytical procedures, right? If you look at the standard, guys, it is only a 12 pages standard SA 520. Very simple standard, very logical standard. But what I've trying here, I am trying to link how to do the audit practically on the ground while reading the SA 520 as well. How do I apply practically on the ground while doing the audit of any company? Right? I give you one more example. So here in this example, I've linked the financial information. So this is financial information. This is non-financial information which has not been disclosed in the financial statement. And I have developed the relationship. Which kind of relationship? Reasonable relationship. Which kind of relationship, guys? Reasonable relationship. And then I will link these two transactions to achieve the overall objective, to obtain the comfort on the entire number. If I don't perform analytical procedure, how would I get the comfort on 1000 crores or not? How do I ensure whether this number is correct or not? How would I ensure whether the company has paid the GST accurately? Right? So this kind of procedure will give me an additional comfort. Yes, the things are in place. This is going smooth. Right? So these kind of analytical procedure we should adopt while doing and while adopting or while determining our audit approach. Right? So this is one example. I give you another example. Let's say company B. Right? Company B. This is the P&L of the company. Right? In this P&L, company has a payroll expense. Right? Within the payroll, you must have seen there are multiple subheads: salary and wages, right? Contribution to PF, contribution to PF, right? Staff welfare. These are the minimum requirement of Companies Act, which is Schedule 3, to disclose the number. Let's say this is 200 crores. Let's say this is 50 crores. And let's say this is 80 crores, right? So how to get the comfort on all these numbers, right? Can I do the testing of entire number? Not possible. Can I do the each and every line item testing? Not possible. I need to apply control testing, whether the control in the organization is operating effectively or not. That provide me the comfort only on the control. Then I need to apply substantive procedure to check whether the numbers are booked correctly, whether the invoice is correct, whether the date is correct, whether the amount has been booked in the correct period or not, and so on, right? And the analytical procedure as well, which provides me a comfort that yes, this numbers is reasonable. What I can do, I can do a comparison with the previous year. I can do comparison of payroll expense with previous year. That means we will do the comparison of previous year, right? We can do the comparison of number of employees, comparison of number of employees with previous year, right? What is the number? For example, opening number of employees, opening number of employees, new joiners, right? And leavers who will leave the organization during the year, and the closing number of employees. Correct? Closing number of employees. For example, this is current year. For example, this is previous year. I will get this information, right? And in the employee wise, if I get the basis of category of the employee, and if I multiply with the average salary of every of the respective level of category, respective category, right? I will get, I will reach to a certain amount which is seem to be reasonable, which should match with my 200 crores number in this particular case. I'm not saying that it will match one to one, it will match pi by pi. It is not the case. The objective is whether it is reasonable, whether it is going in the same direction or not. I will also check that if in the current year, let's say 100 people have joined, in the previous year 60 people have joined, right? Let's say lever is 20, right? Lever is 10, opening is, let's say, 50. This is 50, right? So, or let's say this is 80, right? So we will get some number here. So we can do the mathematical calculation. We can apply some sort of analytical procedure in this, that boss previous year, for example, this comes out to be 130. That in the previous year, number of employees was less, right? In the previous year, number of employees was less. Why in the previous year, the payroll cost was more? We can do some sort of mathematics here. We can do some sort of analysis here. We can do some sort of analytical process here. Why the number of employees was less in the previous year and still the company was having the high payroll cost in the previous year, right? So that is the level of methodology, mathematics, analytical procedure we can apply. Contribution to PF, basic pay multiplied by the percentage, I will get the contribution to PF amount. So if I get the salary register, if I get the salary register, and in the salary register, if I take only the basic pay, multiply by the PF contribution, I will get this amount. What is salary register? Salary register is a non-financial data. What is PF percentage? Non-financial data, right? If I multiply by the basic pay, I will get the comfort on the financial information, right? So guys, what is financial information? What is analytical procedure? Analytical procedure is nothing. It is a method of analysis that we are just applying our mind to analyze the financial information by developing a relationship between a financial information and non-financial information. These are just the example which I have quoted. It can be anything, right? It can be anything. And it is very important to apply analytical procedure apart from the normal control testing, apart from the normal test of detail, which an auditor just perform, right? In order to obtain a comfort on the overall number, whether the number is going in a right direction or not as compared to previous years, as compared to the market trend, as compared to the industry trend, analytical procedure is must, right? Even in the peer review by ICI, and within the organization, certain reviews in the big four which I have seen in my past life, these type of question has been raised. Why you have not done any kind of analytical procedure if not adopted by the auditors, right? So it is very imperative that we understand what is analytical procedure, how it needs to be computed, how it needs to be applied, and how it needs to be documented. Right, guys? Let me go back to my PPT, and I hope that you have got some sort of understanding what is analytical procedures. Right, we have devoted almost 20-25 minutes on this. What is analytical procedure? I will take only 2 minutes more to capture the definition what has been given in the standard SA 520. So SA 520 says analytical procedure means evaluation of the financial information. We are evaluating a financial information through the analysis of possible relationship. What is possible? Reasonable relationship. What is reasonable? Then you're doing apple to apple comparison. You are developing a relationship between apple to apple, oranges versus oranges. It is not a case that apple versus orange. Depreciation versus sales, no relationship. PPE versus salary, no relationship. Other income versus investment, no relationship, right? So we need to develop a possible relationship, reasonable relationship through financial and non-financial data. Analytical procedure is very important tool of audit in order to obtain a comfort on the entire number which is given in the financial statement. Couple of non-financial data, as I mentioned in my canvas: number of employees, workers, volume, capacity, inflation rates, number of rooms in a hotel, occupancy rate, wastage percentage. So these are some non-financial data which are generally not disclosed in the financial statement, right? So I hope you have got some sort of understanding what is analytical procedure, why it is important. Answer is very clear. It is important to obtain the comfort on the overall number, because it is not possible to check each and every line item, each and every transaction of sales, of purchase, of payroll, or any other item while doing the audit. Because as an auditor, we are doing or performing the lots of audit in the industry, right? So we need to be cautious. We need to ensure that all the accounting standards, all the auditing standard needs to be applied while performing the auditing procedure, guys. Okay. Next point is segregation of the analytical procedure. How do we segregate? What type of different types of analytical procedure? So analytical procedure based on the client information, company information with the industry data, right? Client information, current year data with the previous year data, right? Current year results with the expected results. For example, if the client has done the or adopted the hedge accounting, they have taken an instrument, maybe future forward, right, options, and the expected, and the client was expecting that by adopting the hedge accounting, their PNL will be neutral, because it will be a, because they have adopted hedge accounting, it's a cash flow hedge, right? But whether the results which the client was expecting and the actual outcome, whether that is in the same direction or not, right? That is another way. Another is company's current year data with the expected results of the auditor, right? Comparison of the client data with the expected results by using the non-financial data as we discussed, right? So it can be anything, my dear friend. It is not the case that whatever is written in the standard, that is the only analytical procedure. It provides a high level overview. These could be the analytical procedure. It's all about creativity. It's all about our mindset, that what is the reasonable relationship which we could develop from financial information with a non-financial information, right? So as an auditor, we should be vigilant what is happening around, what is happening in that particular industry, what is happening in the company, right? For example, let's say I give you a practical scenario. Let's say I was in a discussion with the CFO of a company in the past, and the CFO was telling me that they are going to invest, they are going to purchase one land, and they are going to invest in the new plant, right? And they have issued compulsory convertible debenture. Then my straight away question to that client: why compulsory convertible debenture? Why not preference shares? Why not bank borrowing? Why not equity infusion? Right? Because just by introducing compulsory convertible debenture, it may increase the complexity from the accounting aspect, right? That's different. But from the vigilant perspective, I should be raising a silly question as well, right? Why only convertible debenture? Why not loan from banks? Why not loan from financial institution? Why not the compulsory convertible preference shares? Why not equity infusion? Right? So that level of information we should corroborate with the client while having a planning meeting with the client CFO or the client team as well. Right? So it's only a methodology. The standard is providing you the guidance. How do you move further while doing the analytical procedure? It can be any type of mathematical calculation, any type of relationship between the financial versus non-financial data. Right, guys? Okay. Let's move on. Okay, one example I've incorporated: an auditor. An auditor wants to verify the payment made by the company XYZ on account of the fourth floor building rent for the year 2021, right? The rent was 50,000 rupees per month. The monthly rent payment was consistent with the rent agreement. That means auditor has checked that the 50,000 rupees is the rent amount, and as per the contract it is 50,000 rupees, and the company is paying on a regular basis, right? However, the some companies in the same building are paying rent of 30,000 rupees. So first of all, the auditor needs to be vigilant, right? What is the general rent charge which the companies are paying in a same building, in a same area, or in the similar area, same building, same developer, right? Same owner, same lessor, right? So that level of judgmental is required, that level of vigilance is required. So how the company will apply the analytical procedure? So company will simply say that I have got the information, or the auditor will simply say that I have got the information that these companies in the same premises with the same lessor is paying 30,000 rupees per month. Why you are paying extra for the same space, for the same service? Is there any relationship between the lessor and lessee in this case, right? Whether there is any additional fund which has been taken out from the company or not by increase the rent amount, or is there any cashback to the CFO? Is there any cashback outside the agreement, right? So auditor should be very vigilant while doing the auditing, right? So the objective or the perspective of the standard is we should be vigilant, apply analytical procedures, right? It may possible that auditor will not get that level of information, then it is a separate discussion, right? In this particular example, we have said the auditor is aware of the fact that the other companies in the same premises getting or is paying 30,000 rupees. Then corroborative evidence, one information with other information, one financial data with the non-financial data. We need to develop the relationship. Correct, guys? Let's move another information. Analytical procedure involves analysis the relationship between financial and non-financial data. Explain with the help of example as to how the stat auditor will analyze the relationship with respect to total wages. If the company is paying total wages to the contractor, how should I develop the relationship? Very simple. If I take the number of employees, if I take the number of the workers which the company is having, multiply by the average worker cost, or I can divide at the employee, or I can divide the employee salaries on a category level. Director, maybe this amount. Assistant manager, maybe this amount. Manager, maybe this amount. General manager, maybe this amount. Multiply by the number of general manager which the company is having. So I will reach to a certain conclusion. Yes, by doing some sort of mathematics, by doing some sort of analytics, this should be the amount which should come in the financial statement. But company has shown this much of amount. What is the reason of variance? First, the auditor should also evaluate what is the reason of variance. Then the company should also get involved. Company should be asked why there is a big difference which is coming in this. Difference can be very minimal. Then we should document it. It is immaterial in this particular scenario. Hence, we have not moved forward. But documentation is also important, right? Documentation is also important in the audit scenario. As we have seen, the regulators are going strict in this particular aspect, and there are lots of lapses which we have seen in the past in the different companies, right? Documentation is very, very important, right? So analytical procedure, nothing, just the methodology to analyze two different information to reach to a particular conclusion so that I can issue my audit opinion. Whether it will be a clean report, qualified report, modified report, whatever it will be, the objective is to get the comfort in the financial statement. The number is disclosed in the financial statement by the company. That's the objective, right? Let's take one more example. Comparison with the industry. I can do the comparison with the industry. For example, inventory turnover ratio in a particular industry, right? Previous year, 2021 versus industry. Companies current year data with the industry data. Companies previous year data with the industry data, right? Even while doing the impairment study, guys, I have just given an opinion on the impairment to one company where we have seen that while calculating the weighted average cost of capital, what is the KD, which is cost of debt, which the industry are taking in that, which the different companies are taking in that particular industry, right? So we have gone, even most of the information are available on Google on their respective website as well. right? Bloomsburg is one of the website where we can extract lots of information. The valuation team of different companies are extracting lots of information from the Bloomsburg site, right? So we have actually taken the different cost of debt, which has been taken by the different industry, which has been given in the different industry on the particular Bloomsburg site, right? So we have considered the average cost of debt while computing the impairment analysis, or while computing the weighted average cost of capital for one particular company for impairment assessment. So it's all about judgment. It's all about professional acceptism. It's all about your experience. How do you link one information with the another information to reach to a conclusion, to give an audit opinion, to give a opinion to the client? That is what is this analytical procedure means. I hope you have got a good understanding in respect of analytical procedure, right? Okay. Timing. Should we do the analytical procedure at the beginning? Should we do the analytical procedure during the audit, or should we do the analytical procedure at the closure of the audit? What is the right time? The right time is very clear. While performing the audit procedures, I should have the planning meeting with the CFO. I should have the planning meeting with my team. I, as an auditor in charge, I should have been discussing what is the business updates in your organization. What are the critical updates which has happened in the current year as compared to previous year, right? What new transaction you have entered into? What is the plan for the company? Whether the company is planning for an IP or not? Whether the company is adopting Ind-AS or not? What are the new, whether the company has issued ESOP or not? What additional new thing which has come up in the current year as compared to previous year? Right? Whether the company has entered into any global contracts, whether the company has entered into more related party transaction or not, right? Why the sales have been increased, right? Because before reaching out to the planning meeting, we should have the first level of first cut financial statement to understand, to identify what is the question I'm going to ask with the CFO, right? So at that level, I should determine what are the different auditing procedures I'm going to apply in each caption by caption. What are the different procedure for sales? What are the different procedure um, for purchase? What are the different audit procedure for payroll? What are the different audit procedure for depreciation? What are the different audit procedure for let's say any other expense, operating expenses? Right? What are the auditing procedure which should adopt in terms of doing the audit of PPE, trade payable, trade receivable, ROU asset, goodwill, impairment, investments, inventory, ECL, provision for doubtful debt. So that level of discussion we should be having at the planning phase. And similarly, the analytical process should be determined only at the planning phase, and it should be continued over the entire engagement. That means we should be working what we have discussed in the planning phase. It may possible that I need to change my approach. It's a normal process, right? If I've considered something at the beginning and during the course of the engagement, it seems that something needs to be changed in my approach, I should change it. That's the role of the auditor. That's the role of the audit in charge, right? So the answer is, it should not be only testing phase. It should not only be completion phase. It should be decided at the beginning, and the analytical procedure should be applied over the engagement, audit engagement, right? This is about the timing of analytical procedures. So this is about the overview of analytical procedure, guys. Then we understand what are the different types of audit procedures. Okay, as I said earlier, that we will touch upon control testing, substantive procedure, and others, right? So if I look at what are the different types of auditing procedures I'm having, the audit procedure has been divided into three types. One is control testing. That means I need to do the controls. I need to do the checking of controls, right? What are the key controls which the company is having? What are the non-key controls which the company is having? Whether it is automated, whether it is manual control, right? GRN, PO verification, three-way match, whether the quantity as per PO, whether the quantity as per invoice, whether the quantity booked, whether they are telling with each other or not, whether the invoice amount matches with the invoice with the cost which has been mentioned in the SAP or ERP, right? So that is the control. So we need to check the control as per the guidance issued by ISAC, right? Substantive testing is, so this only provides me the comfort whether the control is operating effectively or not. Then, but let's say sale is 1000 crores, it is only providing me the controls. There are 10 controls, I have checked it, those are operating effectively. Now just doing a checking of those 10 controls, does it mean that I have obtained the comfort on 1000 crore rupees sale? Answer is no, because I have only ensured the control testing within the organization. I have only ensured the different controls in a particular transaction which exists in the organization, but I have not obtained the comfort on 1000 crores. I have not applied all the auditing procedures on that 1000 crores till now. So I need to perform substantive testing, right? Test of details. What is test of detail? That I will check each and every detail of certain samples. I will do sampling here, right? Sampling here. Now let's say for sales, if let's say there are 1000 crore sales and there is 1 lakh transaction, is it possible for any auditor to check 1 lakh transaction along with the respective documents, along with the respective lots of documents? It is not practically possible, right? So based on the sample size, there is a sample technique which an auditor should adopt, which has been provided by the ICA as well, right? So basis that he will obtain some sort of comfort. So now guys, first I have tested the control, I have checked certain samples whether I have obtained the comfort on 1000 crore sales or not. Answer is still no. I need to apply some sort of analytical skills so as to obtain the comfort on the sales, right? So as to obtain the comfort on the sale quantity, right? So that is what the analytical procedure mean, to obtain the comfort on the value of the financial statement caption, which is mentioned in the financial statement, whether it is fixed asset, whether it is sale, purchase, revenue, expenses, payroll, or any other item, sorry, or any other item in the financial statement, guys. And we need to develop, how do we do the analytical procedure? We need to develop the reasonable relationship between the financial and the non-financial data, right? Reasonable is very important. What is unreasonable? Linking of depreciation with the sale is unreasonable. Linking of other operating expense with the trade payable is unreasonable, right? So we need to link in a rational manner, reasonable manner. And some other procedure is like inspection, for example, inventory count, for example, PP physical verification, external confirmation, cash and bank, trade receivable, trade payable, security deposit paid. We need to obtain the external confirmation from a third party. Recalculation, it may possible that I will recalculate the number, for example, interest income given by the bank, interest income booked by the company based on certain valuation, based on some workings, reperformance observation. That is what the auditing procedure. And within the audit procedure, substantive analytical procedure is also a very good methodology in obtaining the comfort on the financial statement caption numbers, right? And what is audit assertion, right? All the auditing procedures will result into a CVOP comfort. What is CVOP? C stands for completeness, E stands for existence and occurrence, accuracy, valuation, obligation and rights, presentation and disclosures. Completeness, whether my sale is complete or not, I need to apply procedure. For example, cutoff, right? Whether my 1000 crores is seems reasonable or not, right? I need to apply analytical procedures. Accurate or not, I need to apply analytical procedure. Existence or not, verification or not, or valuation or not, obligation, rights and obligation, presentation or disclosures or not, right? For each item in the financial statement, we need to ensure that whether my auditing procedure is providing me the comfort on each of these assertions or not. If that we keep in mind, that whether this auditing procedure is providing me the comfort on C, I'm good to go, right? Whether this process providing me the existence and occurrence, I'm good to go. Whether these procedures are providing me the comfort on all these 6 assertions, then I'm good to go, right? But if by doing all the auditing procedure, I'm getting a comfort only on the completeness, but not on accuracy, not on valuation, not on obligation, not on presentation, not on existence, then I have not done my work. I have not justified what I've done in that case, right? So it is very important that what is the target, right? Target is the CPOP. Target is that we should get the comfort on the numbers by performing the audit procedure to ensure that all the six assertion get satisfied, right? So these are the methodologies of auditing. These are the types of audit procedure, and these are the objective, right? If I have keep in mind that whether the inventory exists or not, I should do the physical verification, right? If there is a, for example, derivative, I should go for the valuation. I should ask the company to get the valuation done, right? So that level of mindset we should be having in order to ensure that the auditing procedures are going in a right direction or not, right, guys? Okay, what factors to be considered for analytical procedures? What factors? Availability of data. It is very important that we have the effective data available. Only then we can do some sort of analytical procedures. I cannot do analytical procedures verbally. Very clear, right? We should have some data. We should have GST rates. We should have the GST return available. We should have the sales value available at the different category. Only then I can compute what is my sales, whether it is tallying with the GST numbers or not. Disaggregation of data, different category of information data should be available. Type of account, data must be available at the different type. For example, sale, purchase, payroll, receivable, payable. It may not be useful for other income, right? Other income, for example, a company has sold the mutual funds, right? In which company has gained certain amount. I can't do analytical procedure in that case. I just check, well, what is the rate on that particular date. That's a checking. That's not an analytical procedure, right? But if I talk about interest income, I can do some sort of analytical procedure. For example, I compute what is the amount of FD at that particular period of time. What is the interest rate by looking at the website of that company from the bank, right? And multiply by the time period. I will recompute what is my interest income. And I will then compare it what is the interest income which the company has booked, right? So we should have the different level, different type of data available. Reliable source should be reliable. It should not be a case that I will be reaching out to client that boss, your number is incorrect because I have get some information from one of my friend in different industry in different location, and he's saying that sale in this particular company should not be more than 100 crores while you have booked 500 crores, right? What is the reliable source? There is no reliable source in this particular case. Predictability, nature of assertions, as I said, completeness, accuracy, valuation. Inherent risk, if the inherent risk is high, what is inherent risk? Inherent risk means the chances of doing the error is high, that manual intervention is there, chances of doing the error is high. That is the inherent risk. If the inherent risk is high, we should apply the analytical procedures more in order to get the comfort on the numbers. So these are the factors which is given in SA 520 to consider while determining my analytical procedures. Correct, guys. These are the important factors. Reliability of data. What is the source of information? Whether it is an independent source or whether it is a company related source or the company provided source, right? We need to evaluate that aspect. Comparability of information. We can compare with the previous year. We can see the trend of the past 5 years. I give you an example. While doing the ECL calculation, in case of computation of the provision for doubtful debt under Ind AS, we see the trend of last 5 years at least on quarter by quarter basis. What is the probability of default? Whether the customer is paying on timely basis, whether the customer is not paying on timely basis. If the customer is not paying on timely basis, that results into a probability of default, and that probability of default needs to be considered while determining the expected credit loss under Ind AS, right? Nature and the relevance of information that we need to consider, and controls over the information which we have get. Who is preparing? Whose control is this? Whether the CFO is reviewing this or not. If the, let's say, budget has been prepared by the company, right? Who has reviewed it? Is it a case that finance controller himself has prepared and he has reviewed and that's the budget? Where is the involvement of CFO? Where is the involvement of CEO? Because the budget is not prepared only for finance. Budget is prepared for a company, and that amount has been divided into the respective section of the company, right? So factors for applying analytical procedure, very important. Reliability of data, very important. right? We cannot say to the management, I cannot reach out directly, I cannot enter into the room of CFO and say, boss, your number is not matching with my working, which is dependent on some data which is unobservable data, which is not available. I have just discussed my friend that, and the friend is saying, yes, the revenue should not exceed 100 crore rupees in this case. So I cannot enter into the room of the CFO and say that, boss, your numbers is incorrect, right? I need to apply my process, my procedures, my auditing procedures into a rational manner, right? As per the guidelines issued by ICI, right? Considering professional skepticism, considering the corroborative of instances, right? Developing a relationship between the financial and non-financial data, reasonable relationship. It should not be unreasonable relationship, right, guys? Okay, let me move on. Techniques. What are the different techniques of analytical procedures? Trend analysis, ratio analysis, reasonable analysis, and variance analysis. What is trend? Very simple sense. Trend means by looking at the historical pattern, by looking at the past trend, where the sale of the company is moving towards, where the purchase is heading towards, where the inventory number is heading towards, where the provision for doubtful debt is heading towards. By looking at the trend, as I said you earlier, that while doing the ECL computation, expected credit loss, we do the trend analysis for the past 5 years data and on quarter by quarter basis, right? So sample illustration I have mentioned it to you, mention in this particular PPT for your understanding, that for example, sales for 1819, 1920, 2021, and 2122. If you look at, this is the percentage of change. Initially the sale has increased from 7 to 15%, and this has been declined. If you remember, 2021 is a COVID period, right? Every business was struggling at that point in time. I should raise a question as an auditor. By looking at the data, I should raise a question to the management, why your sale has increased during this particular period? Because most of the companies were facing a lots of challenge, except telecom companies, because the user of internet has increased during that particular period. For example, Bharti Airtel, for example, Reliance Jio, they were moving ahead in terms of, because of the usage of the phone, because of the usage of internet, because of the increase in the users of internet, right? But if it is not that industry, it's a manufacturing industry, it's a retail industry, it's hotel industry, it's a airport industry, then I should be raising a question to the management, why your sale has increased from 7.6% to 15%. That is the power of analytical procedure. If let's say company has given you this much amount of revenue, you have done that control testing, that is perfectly all right. You have done the test of details, that is perfectly all right. But just doing the small analytical procedure, I could have raised the different level of questions, which it becomes impossible or becomes difficult to answer from the management perspective, why the sales has increased in a COVID period when every company was struggling at that point in time, right? This is the analysis of trend which I built up, not necessary for the auditor to prepare this kind of trend analysis. This is okay if you want to build up for the purpose of the review of the partner in your organization, good to go. This is a more better manner of the documentation, right? So we can see here the ratio, the percentage, the sales has increased. So what is trend analysis? Historical analysis, right? Just by looking at the history of the company, right, I can predict what should be the sale for the current year from the auditor aspect, right? That is what the trend analysis. I can do the comparison with the previous year, I can do the comparison with the industry benchmark. That is what the trend analysis, right? This is the one sample trend analysis I've given. For example, revenue 2022, 21, 2020, 19, 18, 17. This is the ratio. And revenue has been analyzed in terms of location, right? Location, for example, US, Europe, India, others, right? And you can inquire a reason from the management why there is a big change every year basis. If you look at the revenue of America, it keeps on increasing. If you look at the revenue percentage change in Europe, there is certain ups and down, but ultimately it is increasing. But if you look at the revenue of India, it is almost 4 to 5%. Then you should raise a question that if the promoter is in India, main company is in India, why it is only 5%? Why you are not putting more efforts to increase the revenue in India? Or it may be an MNC company, right? Maybe a US based company. What is the target of the company in India? Why they are not putting more efforts in India? Is there any strategic reason, right? Or India is maybe not may not be their their area of interest to invest more, right? But we should corroborate, we should raise maybe a silly question, we should raise those questions to the management, right? Similarly, I've done the employee cost, total operating cost percentage, right? That should be done in a detailed manner just for the sake of understanding. I've summarized this in a manner so that you can understand easily. That is a trend analysis by looking at the past year data, by looking at the past year trend, by comparing with the previous years, by comparing with the industry trend, we can reach out to a conclusion why it is moving in that direction, why it is not moving in the other direction, right? That is what the trend analysis is. Ratio analysis, very important, very important ratio analysis, right? These are all the techniques of analytical procedures. Ratio analysis, you guys must have seen that the Schedule 3 in India has got amended last year and it was effective from 1st April 2021. And around 11 ratios have been embedded in the Schedule 3 by the MCA. So the companies must have reported all these ratios in their financial statement for the year ended 31st March 22. What are those ratios? Current year ratios, debt equity ratio, service coverage ratio, return on equity, turnover ratios, receivable turnover, trade payable ratio, net capital, net profit, capital employed, investment ratios. 11 ratios has been incorporated, and it is not only for 22, it is also for comparative year numbers 31st March 21. And if the ratio as compared to the previous year is changing by more than 25%, company is supposed to provide the reason in the financial statement why the ratio has increased or decreased by more than 25%. So ratio analysis is a very important aspect, very important tool, very important technique to evaluate, right? If the debt equity ratio is increasing, that means company is a more debt funded company, right? It also provides it also provides the direction whether the company is going into a liquidity crisis, whether the company is going or to face a going concern issues or not, whether the company is a debt heavy company or not, whether the company is a asset heavy company or not, whether the sales of the company is moving in the right direction or not, what is the GP ratio, what is the COX ratio, whether the COX ratio is consistent or not, is there any reason why the COX ratio is increasing or decreasing, whether the company is or involved in the production process. So ratio analysis, very important tool, correct? So we have discussed trend analysis, we have discussed ratio analysis. Now the question rises, sir, how do we get the formula of these ratios? Every company may use the different ratios because we have read in CA final, this is the ratio, this is the formula, right? But in order to generalize the entire industry, is the formula provided by MCA? Answer is no. The MCA has not provided any formula for this. But then ICA has come into the picture and ICA has provided the formula of all the ratios. Current ratio, current assets upon liability, debt equity ratio, debt upon total equity, debt service ratio, turnover ratio, trade receivable turnover ratio, and so on. So ICE has issued a guidance note on revised Schedule 3 and they have provided their guidance that how these ratios needs to be computed. And on the top of it, MCA said that the basis should also be disclosed, right? For example, what is given in the numerator, what you have considered in the denominator, what is the current period, what is the previous year number, right? What is the previous year ratio or percentage variance, and reason for percentage if it is changing by 25% or more, either increase or decrease. So these ratios are very good indicators for doing the analytical procedures, whether the company has the liquidity to pay the debts in the future or not, whether the company is asset heavy, whether the company is liability heavy, whether the company is moving towards the liquidity crisis, whether the company is moving towards going concern crisis, whether the company is getting the return on the capital investment, whether that is reasonable or not, right? That level of analysis we should get if we adopt analytical procedures, right? That is on the ratio analysis. Reasonable analysis, third technique is reasonable analysis, that whether the things are reasonable or not. For example, company has done the different purchases in the different years, right? This is the freight outward expense, this is a freight inward expense which the company has incurred, right? If you look at, purchase is increasing, but the freight has been reduced in this particular year. So just by computing the freight percentage, I get to know the ratio of the freight is declining, irrespective of the fact that the purchase has increased in this particular year. Then I should raise a question to the management, sir, why? Right? Auditor have to raise their question, why this is happening like this, right? That is called reasonable analysis. Whether the company is booking the freight expense in a correct GL code, is it possible, or it may possible that the company has booked or the accountant has booked the certain freight expense in the different GL, maybe intentionally, maybe unintentionally, right? I give you a one live scenario a way back, right? A way back. Uh, Fraud has been identified in one of the big companies in India, right? It was a 1,000 crore fraud, right? So what they have actually done, they used to borrow money from the big officials, big peoples in the market, and they used to pay certain interest amount, for example 30%, 25%, 35%, right? And they used to adjust those numbers against the receivables, against the trade receivable. And once the audit has got completed, they return it back, but they have to pay the interest as well. And they book the interest, they divide the interest expense into different small numbers, and they book it into the different multiple heads, not in the GL code of interest, but into the different GLs, right? That has not been identified by the auditors, because it may be possible at that point in time the materiality of auditors was quite high, right? But when the fraud has been identified, then it was identified that around 20 crore rupees number pertains to 2 to 3 months interest which they have paid to certain big people, right? So it is very important to understand the reasonableness, whether it is going in a right direction or whether it is not going in a right direction. That is called reasonableness, right? One example, the freight expense which I have given to you. Then another example, salary. Number of employees has been reduced, but still the salary has increased. Question is why? Give me a justification, CFO sir, why it has been increased when the number of employees has been declined in your organization. So what has been done? What has been done in this particular year? Why the cost has increased? It may be possible that the top level of employees, they have hired more and they have reduced the lower level of employee. It may be a reason, right? But we need the rationale. We need the justification why this seems to be unreasonable. What is the justification behind that? We need that level of information. We need to develop our mindset. We need to extend our vision to understand, to include all such kind of procedures in our auditing engagements, right? This is about reasonableness. Then we have variance analysis. Variance analysis, quite simple. Current year number versus previous year numbers. Then we compute the variance. Current budgeted numbers versus actual numbers. Then we identify the variance and we sit with the personnel, relevant guy, then understand why there is a big change. If there is a budget that I will do the 1,000 crore rupees capex, if the company has actually done a capex of 1,500 crores, from where you have got the funding, right? When the budget was 1,000 crore, what has been done, what was the reason during the year due to which the management has changed their view that it should increase to 1500 crores, whether the company is getting more sales, whether the collection is more good as compared to previous year, what has happened significant, what has happened exceptionally in the current year due to which company has decided to incur additional 500 crores on account of capex in this year. So that level of variance analysis we should have. So these are the four techniques, guys: trend analysis, variance analysis, reasonable analysis, ratio analysis, that we should keep or that we should include in our testing on all auditing engagements. I hope you have got some sort of perspective. What is analytical procedure? What are the factors to be considered? What is the source of documentation? What is the reliability of the data, right? What are the different techniques? What are the different techniques of analytical procedure, and what are the different auditing procedures, and where the analytical procedure will fit in the entire analytical procedures, right? Okay, so this is one analysis which I've done for you. For example, this is the balance sheet phase, current year, previous year, what is the variance, what is the variance percentage, and then I need to sit with the relevant guy in the organization, what is the reason. Ideally, this should be done at the schedule level, right? Ideally, this should be done at the schedule level. Why the vehicles has been increased? What is the additional requirement? Why the vehicles have been sold? Why you have added the additional plant and machinery? Why the plant and machinery has been sold in the current year, right? Why the company has taken loan, why the company has paid loan, why the financial asset has been increased, why the financial asset has been decreased as compared to previous year. That is called variance analysis, right? Similarly, we need to perform the similar exercise for sales and the P&L, current year, previous year, variance percentage, and reasons for that variance, right? Again, this needs to be performed at schedule level. Correct, guys? Okay. Now what we have done, practically aspect or practical approach perspective, I have taken the critical areas of the balance sheet. I have taken the critical areas of P&L, and I have incorporated what are the different analytical procedure which we should adopt in trend analysis, in variance analysis, in ratio analysis, and in reasonable analysis. And um, some sort of format I have defined that this should be the sample format, right? That so let's move on in order to understand different areas with different analytical procedures, right? Just give me a moment. Let me have a glass of water. Okay, guys. PPE, property, plant and equipment. Under Indian GAAP, we have AS10. Under Ind AS, we have IS or Ind AS 16. Under IFRS, we have IS 16, right? So PPE, if I look at Schedule 3, it says that we need to give opening balance, addition, deletion, closing balance, gross block, accumulated opening balance, depreciation during the year, charge depreciation on deletion, closing balance, and the net block and total depreciation. So gross, opening gross, so closing gross block, net block, that we need to give in the financial statement, right? Depreciation needs to be presented separately from the other expenses on the face of P&L, right? So what kind of analytical procedure we can perform in that area? So one is trend analysis, second is ratio analysis, third is variance analysis, and the fourth is reasonable analysis. For example, year on year comparison, addition made in current year as compared to previous year, right? Fixed asset disposed in current year as compared to previous year. Depreciation charge in P&L in current year versus previous year. And if there is any material difference, right? Material, very important. There is a separate guidance note, that is a separate standard of wording, materiality, right? We should consider material. Let's say if there's a difference which has come up of 100 rupees in an organization which has done 100 crore rupees investment, and by doing this procedure there is a difference of rupees, let's say 1 lakh. should we be reaching out to the CFO room and asking, sir, why there is a difference of rupees 1 lakh when we are doing the analytical procedure of a base of 100 crore rupees? It all depends, right? There, the materiality limit should be taken into consideration while raising a question to the management. Correct. So that is a trend analysis, ratio analysis, depreciation ratios, right? We should compute the depreciation ratios on the average assets addition made during the year. Budget versus actual capex done. Budget is the example, the same example which I've quoted 2 minutes ago. 1,000 crores capex was the budget, but the company has actually incurred of 1,500 crore rupees on capex. Why? What is the rationale? What is the rationale behind this additional expenditure? From where the company has got the funding, right? What is the any special technology which the company is bringing in the current year? We need to inquire a reason for such variance. We should perform the quantity analysis of the PP: opening, purchases, disposal, closing, right? We need to give, the auditor has to comment on the fixed asset register as well in the caro, right? So we need to be very, and this is one caro commentary issued by the ICA in the past, that in the fixed asset register there should be a column on the quantity, right? So how do we get the comfort on the quantity? By performing this level of analysis. If there is any variance, we should inquire the reason for this variance. So this is one sample format which I've included to perform the checking of depreciation. This is generally called depreciation logic test, dep logic test. For example, this is the opening block: opening, addition, deletion, closing. Then I'm computing the accumulated depreciation. Opening numbers, this will come from the previous year. Depreciation for the year on opening PP, right? So I've computed depreciation for the year on the additions made during the year. Disposals, closing, total depreciation. This is the number which has been computed by the management. This is the difference. This is the percentage. If it is material, I should reach out to the management and then ask what is the reason behind that. If it is not material, I just need to document it is immaterial and hence I move forward, right? Another additional variance analysis, the PP addition made during the year, current year, previous year at the category level, right? What is the variance? Percentage of variance, reason for variance. It may be logical that we are increasing, we have increasing the capacity, right? But we should know in and out of my client to avoid those kind of scenarios of fraud. Similar to deletion, current year, previous year, variance percentage, reason. This is called variance analysis. Capital expenditure, budgeted versus actual. This is the budget which has been approved by the management, right? Variance. There is also an amendment which has been made in the Companies Act last year, Schedule 3, that if any project which has been exceeded beyond a cost which has been originally approved by the authority, that needs to be disclosed along with the aging, right? So when the management is disclosing, I need to design my auditing procedures according with that disclosures, right? So this is one of the format of how to do the analytical procedure in case of PPE. Inventories, very important area, very default fraud risk area. Default fraud risk means that we have understood this area, people generally commits a fraud. Revenue is generally considered to be a default fraud risk area, right? What can be the analytical procedures? Year on year comparison of stock quantities, opening versus current year closing versus current year closing versus previous year closing numbers. Raw material percentage as a total stock, WIP as a percentage of total stock, FG as a percentage of total stock, per unit inventory verification, per unit inventory valuation as compared to previous year. Provision for obsolescence, compared the current year number versus previous year numbers. GP ratio, inventory turnover ratios. Variance analysis, budget versus actual, inquire the reason for the same, right? It can be actual production, budgeted production, it can be actual consumption of raw material and the budgeted consumption of raw material. Reasonable analysis, opening stock, purchases made, sales, captive consumption, abnormal loss, closing stock, right? Reconciliation of the stock statement submitted to the bank, right? So there is a guidance which has been incorporated by the Ministry of Corporate Affairs that if the company has taken a loan, maybe I believe that they have availed the facility of 5 crore rupees or more, they have to give the stock statement to the banks. Whether the stock statement given to the bank is reconciled with my books or not, auditor has to comment on that. So develop the audit procedure, develop the analytical procedure in order to verify those statements. And if there is any difference or discrepancies, we should inquire the reason for the same, right? This is sample stock movement opening raw material, sample stock statement of raw material opening purchase minus production is equal to closing. This is for the physical verification, and this is the difference. If there is any excess or shortage, that needs to be adjusted in the financial statement, and we need to inquire the difference. Why it is short, whether you have purchased less or whether it has been delivered less or whether there is any theft which has been done during the course of the movement of goods. Finished goods, opening stock, purchase, consumption, captive consumption, abnormal loss, sale, closing quantity. This is my physical verification, difference, excess and short. And then I need to obtain management comments. Similar variance analysis, current year number versus previous year numbers. This is variance, and then I need to compute the percentage, and then I need to acquire a reason from the management, sir, why it has been significantly increased by 250%. Have you increased doing the trading of the goods? Manufacturing the process of manufacturing has been reduced because you are earning more profit in the trading of goods. That may be a reason, but we need to inquire why. Next is investment, right? Investment trend analysis. If the company has used the list, if the company has made an investment in a listed company quoted, so we can take the rate from the listed company from the website, right? And we need to see a trend, whether the price is going down, whether the price is consistently going up, to evaluate whether there is a need for diminution in the provision, whether there is a need for provision for diminution in the value of investment. We can also see whether the company is operating as a trader while doing the sale and purchase of that investment in the past, because that will impact the accounting under Ind AS. If the company is doing the trading, then it is an FVTPL accounting. If the company is not doing the trading, then it is a FVTOCI accounting. Ratio analysis, return on investment, dividend payout, actual versus recomputed effective interest rate, right? We can rebuild the effective interest rate for booking the interest income. Reasonable opening investment, purchases made, sales made, closing investment. Reason why the company has made an investment in CCP, compulsory convertible preference shares, compulsory convertible debenture. Why not any other type of instrument? Why not a debt based instrument? Why not an equity based instrument? That level of assessment we need to make. One similar example I have given here for the mutual funds: opening, purchase, sale. This is closing. What is the NAV at that particular point in time as at year end? What is the amount which has been booked by the company? Is there any difference? If yes, inquire from the management, sir, why? Right? Similar, receivable. Comparison of the closing balance with the previous year. Debtor aging, very important. Debtor aging. We should inquire at least more than 6 months outstanding amount receivable. Receivable from the related party. Why? This is one of the area where the authorities put more focus. Provision for bad and doubtful debt. Ratio analysis in terms of debtor. Sales to credit sales to total sale, debtor turnover ratio, debt collection period, because this will impact if the debt collection period is more, this will impact that the company's the operating cycle is getting more just by not putting more focus on the collection. So as a value addition, auditing can provide its value addition. Why you are not putting more focus on the collection? Because the debt collection period is more by using this ratio analysis, right? Variance, if the company's uh, collection is more than 6 months, is huge, we should raise a question, right? Reasonable, is there any periodic interval confirmation, right? Whether the reconciliation process is accurate or not, reasonableness on the subsequent collection or not, perform opening to closing reconciliation of major customers and evaluate the unusual adjustments. Right, so we need to do some sort of reconciliation, right? Maybe out of 50 out of 50 customers, I will select 10 customers and I do the reconciliation for the entire year from opening till the end. Right, opening sales during the year minus credit notes minus discounts which have passed on plus or minus any adjustment is equal to closing. Sales will get verified from the sales, opening will get verified from the previous year numbers, and adjustment I need to adopt some additional procedures. Right, so that is the power of analytical procedures here. Some samples, debtor year end. For example, this is the aging. I need to inquire why the debtor of more than 6 months is very huge. I can compare it with the previous year and update the management that there is a the variance which is coming. In the previous year, I am having only 10 crore rupees debtor outstanding more than 6 months, but in current year, maybe 100 crore rupees outstanding from customers more than 6 years. Why? Why you are not? Why there is a delay? Right? That inquiry needs to be done. ECL computation. If let's say 1 to 2 years, company is using 25% provision for doubtful debt. 2 to 3 years, why 16%? We need to raise why. Trade payable, similar to debtor, we should apply to trade payable as well. Closing balance, analysis of vendor, receivable from related party, long outstanding payables. Purchases to trade payable, credit payment period ratio, creditor balance to purchase ratios. Reasons for outstanding, not making the payment more than 6 months. Confirmation process, whether it is reasonable with the size of the company or not. We should evaluate the reconciliation of the major vendor, major supplier, right? And identify, is there any inconsistency in doing the relationship, in doing the reconciliation from opening to closing, right? Similarly, similar to debtor, this is the format for the aging analysis for the vendors. Now P&L, right? P&L is again important. P&L is again important. Revenue, we should do party wise party comparison, product wise comparison. I give you a very live example. We should also do some sort of analysis. For example, if the sales of a party is very high in the during the year, but the outstanding amount is very low as at year end, right? That means if the sales has been made to one party during the year is 100 crore rupees and outstanding is let's say 1 crore rupees. While other side, the party who is not very large sales who have been made in the year, but the debtor amount is outstanding. So we should inquire a reason. One side you are saying the sale is very high, debtor is zero, or debtor is very minimal. Other side, the sale is average, but the debtor is very high. Why? Right? It can be a manipulation. The only objective is we need to link the relationship, reasonable relationship. Product wise analysis, right? Price of the product and discounts given to the parties. Discount is a very, very important aspect. Indian GAAP, the guidance of discount is not very clear. Only trade discount needs to be netted off from revenue. Cash discount needs to be recognized as a part of expense. But under Ind AS, the guidance is very clear. Whatever nomenclature you name it, whether it's discounts, credit notes, penalty, fee, bonus, volume discount, trade discount, cash discount, any type of discount that needs to be netted off from the revenue itself. We should be very cautious where the company has adjusted the discounts in the under Ind AS or under Indian GAAP in terms of financial statement preparation. In respect of sales, what are the different ratios? Gross margin to sales return ratio, discount ratios, warranty expense, capital turnover ratios. Variance analysis, we should perform the variance analysis month on month basis, year on year basis. Both kind of analysis will work here. And reconciliation of quantity, opening, addition, sales, consumptions, abnormal loss is equal to closing. Right? This is some product wise analysis which I've done. Current year, previous year, product level, variance, percentage, and the reason for the variance. right? One example I've quoted initially in respect of GST. This is the different category of sales. Multiply the GST at their respective category is equal to the GST value, and it should matches with the GST return. Price wise, party wise outstanding numbers, right? So different parties, current year, previous year, variance, percentage, and the reason for that variance. Similarly, I can apply the cost of goods sold item wise, location wise, quantity wise, and value wise. I need to perform opening to closing reconciliation, different ratios, gross margin, purchases, price and quantity variance, actual cost versus budgeted variance, direct expense to actual production variance, and reasonableness. Reasonableness we will get to know only from the reconciliation, right? Reconciliation of purchases with the return filed with the government authorities. We will get some sort of understanding and the comfort on the entire number. Similar to the similar to the sales, this is the product wise analysis, variance analysis, current year, previous year, variance, percentage, and reason for the variance. Party wise outstanding amount, current year, previous year, percentage, aging. That is a holistic analysis which we can do. Payroll, payroll expense, comparison on month wise salary, right? Number of workers multiplied by the average cost of the worker. Number of employees multiplied by the average employee cost at the different category. I will get the number. Basic pay multiplied by the PF percentage. I will get the PF amount, right? Attribution rates, ratio analysis, attribution rate with the industry, increase in the salary percentage, budgeted versus actual, and inquire the variance for the same. Reasonable analysis, as I said earlier, average salary multiplied by the number of employees, right? For example, this is middle management, senior management, junior management, and factory. Current year versus previous year. Why there is a big change as compared to previous year? That level of question we should be asking with the management, right? This is the age group less than 30, 30 to 40, 40 to 50, 50. If we get that level of information, we can do much more better analysis. But analysis can, the only objective is we can do the analysis that the different category. It's all about thinking, it's all about creativity, it's all about mathematics, right? Expenses, I will straight away come to the format. For example, these are the different expenses we are having. This is the current year number, this is the previous year number, this is a variance, this is a percentage, and we should inquire the reason for this variance from the management, right? I give you an example, right? So one of the example which I quoted earlier, some years ago, I have one fraud has been identified, and then after that, I was doing the audit of that company. So we have seen while doing the auditing, the company used to hire certain warehouses, and they used to put the inventory in those hired warehouses, and it was communicated to us that they have been taken on rent by the company, right? They have been taken on not rent, they're taken, those are the owned warehouses. But later on we realized when we were evaluating, when the fraud report came up, then it was mentioned that those warehouses were not owned by the companies, those warehouses are taken on rent, and rent expense they have divided into the small numbers, and they have booked in some rent amount and some other different categories in the P&L. So we should be very vigilant, right? Rent expense, very important area, right? So while doing the testing, we should be take into consideration test of details, control testing, as well as analytical procedures. Very critical aspects, analytical procedures. These are some sort of flow charts which I've created for you to look at the trend analysis, to look at the variance analysis. For example, this is sales. In this case, I can see the sale is increasing. In this case, PAT is increasing, dividend payout is increasing, CSR is increasing, net fixed asset is increasing, CSR expenditure into broad categories. These are the different levels of variance trend analysis or the variance analysis, right? Certain FAQs, guys, which is the last topic of this discussion, right? So this is a recap what we have discussed in last 1.5 hours. So question is whether analytical procedure means Evaluation of financial information through the analysis of possible relationship among the financial data. Answer is no. It is a relationship, reasonable relationship between financial and non-financial data. Auditor can depend on routine checks to disclose all the mistakes or manipulation that may exist in the account. No, again incorrect. Auditor cannot only dependent on the routine checks. He has to apply his mind. He has to apply his or her mind in terms of analytical procedures as well. Analytical process are required only in the planning phase. No, in all the phases. Planning is only an area of determining what all 10 things I'm going to do in the testing and in the closure. Substantive testing procedures are generally less applicable to a large volume of transactions that tend to be predictable. No, even analytical procedure will be more applicable where the volume of production or transaction is very high. Ratio analysis is useful in analyzing the revenue and expense only. No, ratio analysis is useful in every type of and in all type of financial statement caption barring some. For example, barring some means, for example, other income, right? We can exclude those from the ratio analysis. Statutory order of the company can apply the analytical procedure to the standalone and not to the console. No, incorrect statement. Analytical procedure can be applied to the standalone and to the console. Right, guys? So the gist of the entire session is we should not only dependent upon control testing, we should not only dependent upon test of details, routine checks. We should be very vigilant. We should be talking about and apply the analytical procedures in our audit engagements. Very critical. It is an effective tool to obtain a comfort on the entire number, right? Control testing will give me a comfort only on the different controls which exist in the organization. Test of details will give me a comfort on the samples testing which I'm doing, right? Routine checking will provide me the comfort that basic checks are there, right? Invoice amount is correctly mentioned, invoice rate is correctly mentioned, but not on the overall comfort, not on the overall number comfort. That is only come from analytical procedure. So what is analytical? Just to summarize, it is the analysis of the financial information by developing a reasonable relationship between the financial and the non-financial data, right? Remember, it's a reasonable relationship, right? So this is from my side, guys. Thank you very much. And I would request Anil sir, if we have got any
That's a voice
question,
call.
so I will be happy to answer those questions.
Voice call. Okay. Thank you, sir. Can you hear me?
Yes, sir. You are
Yes,
audible.
sir. Sir, there are certain questions. The first question is whether the GST auditor should check the ITC as appearing in books as appearing in GST portal.
Yes, sir. Yes. GST auditor is supposed to check. See, as I said earlier, analytic. Sir, I'm getting some sort of background voices. I'm getting some sort of background voices, sir.
Yes, sir. Yes, sir. Yes, sir. Now it is clear, sir. Now it is fine.
Not really, sir. Not really.
Now it is fine.
Yeah, slightly better. So, sir, what I'm saying is GST auditor is supposed to check that level of information from the website, and whatever the whatever the GST amount which has been given by the company or the sale number which has been given in the financial statement, that needs to be verified. Either GST return or GST portal versus the financial information. That needs to be checked.
Sir, one member is asking, can you just help in telling what are the major techniques while analyzing this audit or while the making the audit helpful?
Okay, sir. So if I summarize my all the audit procedure that has been divided into three parts, I have also presented one slide for that. Let me represent that. Just give me a moment, sir. That will provide you the better approach for doing the audit. I hope this is visible, sir.
Yes, sir.
So this is the entire gist of auditing procedures, right? One is test of control, which is called control testing. So here, sir, we do the testing of controls in the organization, right? So from, for example, sales, from, for example, purchase, from the entry of the goods in the premises till the recording of transaction. What are the different controls which the company is having? That is called the testing of those control is called the control testing. That may be an automated control, for example, the control which is through system. That may be a manual control. For example, in some organization, the moment the goods enter, the person who is doing the entry at the gate entry, he is passing the entry in the system itself. That is called automated control in the system, through system. And one person in one organization, the person is doing the manual entry in the register. That is called manual control, right? So we need to identify, we need to first perform the walkthrough. What in the entire process, in the entire transaction, what are the different controls which the company is having, and we should document through a walkthrough. That is a legal, that is a audited terminology, auditing standard terminology, walkthrough. In the walkthrough, in the entire process, we need to determine what are the different controls which the company is having. We need to document it, and basis that walkthrough, we should design our auditing template for sales, for purchase, for payroll, for fixed assets, for others. That is called control testing. If it is an automated, for example, depreciation computation, it is an automated control because system compute the depreciation. Then I need to involve my IT team, whether the system is performing and behaving in a correct manner or not. That is an automated control. Second is substantive control. Test of details. I am selecting certain samples and doing the testing. Within substantive process, there is an analytical procedure which we have talked about, and some other process, other auditing process, which is inspection, external confirmation, recomputation, reperformance, observation. So auditing procedure is divided into only these three parts, right? And
Yes.
very critical aspect, CWOP, completeness, existence, accuracy, valuation, observation, obligation, rights and obligation, and presentation and disclosures. If we have these CWOP in my mind, that all these three processes are providing me the comfort on the CWOP, then I'm done, right? But if let's say I have applied 10 procedures and all the 10 procedures will provide me the comfort only on C, but not on balance 5 assertion, that means I'm not done.
Yes,
That's
sir.
a very basic premise of doing the auditing.
Yes, sir.
Yes, sir. Next question, please.
Sir, one member is asking how analytical procedure helps in sample selection.
Okay, I give you a very good example. Let's say there is I am doing the checking of rent, right? And 100 crore rupees rent is coming in the rent ledger, right? And one auditor A, I'm dividing a scenario. Let's say scenario A, one person is saying that out of this 100 crores, I will do the testing of 90 crores and I will do the 90% completion or testing, right? But doing the 90% checking, he has to check, let's say 1000 vouchers, 1000 invoices, right? This is one approach. Second approach is, which the another auditor is doing, he has analyzed all the items which are the different category of rent which is coming in that 100 crores. He is monitored that the company has two factories which is built on the leasehold land, and company is paying rent on a monthly basis from, and those contracts have been done with the single lessor, right? Now instead of doing a testing of 12 different samples, 12 monthly vouchers for two different land from a single person, why there is a need for checking of 24 vouchers separately? If I check only one contract, right, which is valid for the entire year, if I check one sample, one invoice at the beginning of the year, another sample at the end of the year, then I'm done. Instead of checking 24 sample, which the scenario one auditor is doing, I'm doing the second scenario. I'm better off in doing or testing the two samples. Plus, I have tested the contract which the company has entered into. right? So if there is a subscription kind of scenario, I should take the contract, I should check one sample, then I will apply the analytical procedure. 10,000 rupees per month, multiply by 12, 1,20,000 rupees the rent from Mr. A. 15,000 rupees per month rent, multiply by 12, 18 lakh rupees should be the rent, or 180,000 rupees should be the rent for the entire year. That is another way out, right? So it is the professional skepticism and the mathematics, very very important, mathematics, analytics, how we are doing the analytics, right? Auditing is totally about analytics, how we are correlating one information with the another information, right? The in the scenario one which I've quoted, that auditor keeps on doing maybe 1 month, maybe 2 month. That is a very cost engaging scenario. In the another side, the one person can devote 2 days or 3 days while doing the testing of rent. Matter is over. It's all about professional skepticism. How do you understand a scenario? How do you apply your maths? How do you apply your analytics? Simple.
Yes.
Yes,
So
sir. Next question.
what kind of analysis procedures can be performed to get control over revenue of a seller selling variety of trading goods over e-commerce platform for quite a sizable turnover?
Okay, sir, first of all, a person has to understand what are the different scenarios, what are the different type of transaction which the company is having, right? There are a lot of auditing procedures, right? There are a lot of auditing procedures. For example, first I talk about the auditing procedures, right? Test of control is separate. While doing the substantive testing or analytical testing, the company can do, first of all, GST return, right? That is one analytical procedure, as I said in the beginning of my session. Second particular aspect is the uh, comparison of rates, right? If I e-commerce, if I compare
Yes.
the similar product with the Amazon, if I compare the similar product with Flipkart, with Snapdeal, right? That level of analysis for the critical product. I'm not talking about if the company is dealing with 1,000 product. I'm not talking about 1,000 product. I'm only talking about those product which has a larger sale. Maybe one product results into a 20 crore sales out of 100 crore sales, right? So pick up critical product or sample basis, different month, different product. You will get the comfort by comparing with the one company with another company. The best benefit which we have in the e-commerce, that all information, the selling rates are available with the different companies, are available on the Google or available on the respective apps. So person can apply that level of analytical procedures.
Yes, sir. So last question. These guidelines of AS 540, 520 are of statutory audit or internal audit. Most of
Sir,
the points are related with internal control procedures we have gone through.
no, sir, this is, first of all, this is not for internal. This is specifically for the statutory audit. If the internal
Statutory audit.
auditor, this is specifically for the statutory audit, right? This is, so whatever I've discussed in my last 2 hour session, it is not specifically for internal audit. This is for the statutory audit. Whosoever raised this particular question, which member, any the member who have raised this question, sir, my counter question to that member is, let's say 1,000 crores sale figure is there in a company, right? He has tested all the controls, which is very effective. He has taken 100 samples, 200 samples, 500 samples. He has devoted 2 articles, 2 chartered accountants who have devoted 1 month in doing the testing of those 100 crore sample size, right? Now, what about the comfort, right? By doing the sample testing of those 500 invoices, they have only covered 10 crores. What about 90 crores? How do they get the comfort on balance 90 crores? So they will get the comfort on 90 crores by applying the analytical procedures, right?
Yes.
Otherwise, there is no other methodology that they can adopt, or they can verify, or they can give the comfort to their partner. Yes, we have done we have done the audit procedure who has given the comfort on an entire 100 crore rupees number. So analytical procedure,
Yes.
so whatever we have discussed, that is specifically for the statutory audit. And if the internal auditor wants to adopt it, there is no doubt they can adopt.
Yes, sir. Sir, one more question. Last question there is vouching and verification, which are we are doing during audit, falls under test for details or something else?
test of details. That is called test of details. For example,
Test of
I, I,
details.
I I give you some more insight in respect of test of details and control testing and analytical procedure. So first of all, we have understood, I believe the people have understood what is analytical, right? It's all about creativity, mathematics, linking of one information with another information, that is analytical. What is test of details? Test of detail means that suppose there is an invoice, right? I'm looking at the invoice, whether the invoice rate is correctly mentioned in the system, whether the invoice amount is correctly mentioned in the system, whether the invoice quantity is correctly mentioned in the system, whether the invoice has been correctly booked in the correct period, whether the customer name has been booked correctly, right? And whether the, for example, whether the TDS if needs to be deducted, whether the GST rate which needs to be charged, whether those are correct or not. That is called uh, test of detail. That means I'm doing the testing of details of the invoices, right? I'm
Yes.
doing the testing of the details of the invoices. That is called test of details. What is test of control? That means in the entire process, the entire process of the company of for
Yes, sir.
example, revenue process, production process, capex process, opex process, taxation process, or any other process. While doing the walkthrough, I have identified the company is having 10 controls. Whether those controls are operating effectively or not, that is called test of control. For example,
Yes, sir. Yes.
let's say the company has a process of running the depreciation to system on a monthly basis, right? There's a functionality in SAP that they have to run the process on every month end, right? Let's say there are two steps involved. One the person will initiate compute and another person will approve. Then I will, on a monthly basis, then I will select the sample whether that process has been happened or not. That one person has initiated the, for example, I pick on April month, whether the person has initiated the process or not, whether the depreciation run has been done or not, whether the person has approved that computation or not. This is one example of test of control. Another example could be, for example, bank reco, right? So bank reco, every company prepares the bank reco on a monthly basis, right? So what is the control? The control is bank reco has been prepared on a monthly basis by Mr. A, reviewed by Mr. B, and verified by or authorized or approved by Mr. C. Then on an yearly basis, as an auditor, I will select 2 months. One is March 22 and any 1 month during the period. Then I will check whether the bank reco has been prepared. Yes. Whether the bank reco has been prepared by Mr. A. Yes. Whether the bank reco has been reviewed by Mr. B. Yes. Whether the bank reco has been authorized by Mr. C. Yes. Whether there is any reconciling item from the bank books and the cash book. No. If yes, whether those reconciling item reasonable or not, I need to check and then I need to comment. That is called test of control, where I am doing the testing of control. While in the test of details, I am doing the testing of the details which is given in the invoice, which is given in the vouchers. That is the major difference between these two.
Yes. So thank you so much, sir. You have justified with your presentation. You have covered all the aspects relating to SA 520, various types of the audit procedures, and enlighten all of us on various intricacies relating to this analytical procedure. Once again, thank you so much, sir. On behalf of Auditing and Assurance Standard Board, I extend my heartiest thanks towards you for sparing your valuable time and enlightening all of us relating to this auditing standard. Thank you so
Thank
much,
you.
sir. Thank you.
Thank you, Anil sir. Thank you so much. And thank you to all the
Thank you.
and very, very basic question as well, that what is I was struggling to understand what do you mean by these things, right? So actually,
Yes.
this is a genuine question, which I would say. But
Yes.
definitely, I've enjoyed a lot,
Thank you.
sir, by providing my
Yes.
insights,
Yes.
my understanding, what I've gathered in last 14, 15 years, including my articleship period, right? So I hope the members will able to understand and they will
Yes,
take the
sir.
advantage of
It
this
was
learning.
really wonderful deliberation. Wonderful deliberation, sir. Thank you so much, sir.
Thank you.
Thank you, sir.
Thank you, sir. Thank you
Thank you.
so
Thank
much.
you. Thank you.
Okay. Bye-bye.
Namaste.
Namaste, sir. Namaste.
Bye.